The intelligent investor is a realist who sells to optimists and buys from pessimists. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Those who do not remember the past are condemned to repeat it. An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Operations not meeting these requirements are speculative. But investing isn't about beating others at their game. It's about controlling yourself at your own game. The stock investor is neither right or wrong because others agreed or disagreed with him. He is right because his facts and analysis are right. As the Danish philosopher Søren Kierkegaard noted, life can only be understood backwards, but it must be lived forwards. People who invest make money for themselves, people who speculate make money for their brokers. The punches you miss are the ones that wear you out. Boxing trainer Angela Dundee. You'll be much more in control if you realize how much you are not in control. And back in the spring of 1720, Sir Isaac Newton owned shares in the South Sea Company, the hottest stock in England. Sensing that the market was getting out of hand, the great physicist muttered that he could calculate the motions of the heavenly bodies, but not the madness of the people. Newton dumped his South Sea shares, pocketing a 100% profit totaling £7,000. But just months later, swept up in the wild enthusiasm of the market, Newton jumped back in at a much higher price, and lost £20,000, or more than $3 million in today's money. For the rest of his life, he forbade anyone to speak the word South Sea in his presence. Invest only if you would be comfortable owning a stock even if you had no way of knowing its daily share price. Americans are getting stronger. 20 years ago, it took 2 people to carry $10 worth of groceries. Today, a 5-year-old can do it. Henny Youngman. Buy cheap and sell dear.